I think it's all about the direction on unemployment and the unemployment ratio, because I think it's a very strong historical correlation between the charge-off, especially on the consumer portfolio of those banks, and the unemployment rate. I think also there probably a relation between 1 million increase in unemployment that translates in something like 150 bips increase in charge-off. So we need to see, and I think also we'll only have clarity after the summer, whether this, how much of the, say, newly created unemployment is going to be permanent or only is going to be temporary. And I think also this is the biggest unknown we face in the current situation.
Filippo, what are we likely to hear on the cost front when we hear from these U.S. banks? Clearly, this has been a huge topic for the European banks, even more so than stateside. Is there much more room to go when it comes to cost cutting and measures of this sort in the U.S.?
Yeah, I think also there is much more room to go in the United States because, as you said, correctly pointed out, European banks have been used to resort to the old-style cost cutting over the last 5, if not over the last 10 years. I think for American banks, of course, they are very different. They've been having a very different monetary policies. They only changed recently, and of course, I mean the fact that the rates are anchored around 0% and probably will be there for the next at least a year, if not 18 months. Then I think also the management of the U.S. banks also will resort to some sort of cost cutting. They will have to think hard whether the branches and the footprint is appropriate or not, and whether they need to tackle the cost base. And something they haven't done because, of course, I mean rates and curves were very much conducive to the banking business up till probably until the first half in 2019.